Hi guys, it's Stock Curry, and as layoffs continue to mount, it's easy to get down about the stock market, but I'm going to show you why things aren't quite as bad as they seem, and why we might still in fact get that relief rally in November and December. So let's get into it! On Thursday and Friday last week, there were a ton of layoffs and hiring freezes announced. Amazon announced that they were pausing their hiring for their corporate workforce. Lyft cut 13% of its workforce. Chime cut 12% of its workforce. Dapper Labs laid off 22% of its workers. Stripe laid off 14% of their workers. And Wells Fargo's mortgage staff is bracing for layoffs as U.S. loan volume collapses. On top of that, Twitter is getting ready to lay off half of their staff, about 3,700 employees. And all of those layoffs were announced just on Thursday and Friday alone. So are we finally going to get a break from these layoffs this week? Well, unfortunately not. Because on Sunday, Meta announced that they could start large-scale layoffs as early as Wednesday. So with all of this doom and gloom and all of these layoffs occurring, you would think that the entire economy was about to collapse. But in fact, the layoffs so far have mostly only been in the tech sector. You think about the retail sector, they're trying to hire, get ready for the holiday season. So far, the layoffs have been in the tech sector. They've been limited to the tech sector. That's why on Friday, when the U.S. payrolls came in, they showed a surge of 261,000 jobs added in October. Now, this was a surprise to the upside, and it shows how the overall economy is doing just fine, even though the tech sector is really struggling right now. Now, just because 261,000 jobs were added does not mean that everything is rosy and we're completely out of the woods. Because the unemployment rate also moved higher to 3.7%, while a broader jobless measure also increased to 6.8%. So even though we have a net increase in jobs, we are also getting an increase in the number of people entering the workforce, and this has caused the unemployment rate to rise. That means even though everything is fine for now, we will get a recession later, probably closer to 2023, and I'll talk more about that in a minute. But at least for the time being, it looks like we're going to avoid any significant recession. It looks like the Fed will probably not do another 75 basis point rate hike in December, and the market is expecting them to do a 50 basis point rate hike. So it is lining up for us to get a relief rally starting on Wednesday after the elections here in the United States. Historically, during a midterm election year, we will get a pretty major relief rally, just like we saw back in June and July. We'll get another one of those in November and December, based upon how the market historically trades during a midterm election. Now, even though we're not in a recession yet, the economy is slowing down and it is showing signs of near recession levels. A closely watched survey from the National Association for Business Economics has shown a decline in sales for companies that has not been this sharp since the mid-2020 COVID crash, and it's getting very close to a level which corresponds to several past recessions. The index is close to, but not at, recessionary levels. As you can see here on this chart, once the index turns negative and we start seeing a decline in net sales, that is when we usually get a recession. However, there have also been a number of points that we've gotten down to this level and we've rebounded and avoided a recession. By another NABE measure, however, the net rising index for profit margins, the recession is pretty much here. As you can see on this chart, profit margins are declining, which means we most likely are already in a recession based upon this one measure. Also of concern is that the net rising index for wages reached its third highest reading ever, surpassed only by January and April of this year. You might recall how Jerome Powell, for the first time ever, said he is now concerned about a wage price spiral where wages start going up, which causes more inflation, which in turn causes wages to go up, and it just continues and gets out of hand. Jerome Powell is now concerned about this, and the data is there showing that this might actually happen. And if it does, inflation will become entrenched, and at that point, we are in deep trouble as an overall U.S. economy. But it's important to understand that we're not in trouble yet. This is an ocean liner of an economy, and as long as people have jobs and income, it won't go over the edge and fall into a recession. The unemployment rate is ticking up. However, it still remains historically low at a near 50-year low. So at least for the time being, here in November of 2022, we're still okay. We're not quite to recession levels yet. There is other data pointing to the fact that we might enter a recession very soon, however, as inflation is expected to dampen holiday spending, which will lower retail sales as well as retail profits. Now, ultimately, the stock market trades not so much upon the economy, but upon the expected earnings from companies. And over the past few weeks, we've gotten through a lot of the large cap and mega cap companies and heard their earnings reports. While some beat, some missed, the overall consensus is that Q4 is not going to be a good quarter for companies. Now that those earnings are out of the way, we now get into the small cap earnings season. And we've got a lot of really important small cap stocks reporting earnings this week. Now, I'm going to get to those in just 1 minute, but first I want to show you that even though the market is going down and even though we might be entering a recession, you can still make a lot of money in a market like this. Last week, I made an 84% overnight profit on a NASDAQ put and a 125% profit overnight on an Apple put. If you want to make profits like these in your portfolio, then come join my coaching program where I will teach you how to make profits like this, and you could potentially make 125% profits overnight in your portfolio also. My coaching program had been closed for the past 2 months, but just over the weekend, I opened it up again to new members. And as a thank you just for being so patient and waiting to get in, I am offering a 20% discount to the first 20 people who sign up. Now, 3 of those slots are already gone. I've got 17 slots left. And if you are one of the remaining first 17 to get in, you'll get a 20% discount off the coaching program. So go to weprofitdayandnight.com, schedule a call with an onboarding specialist, see if this program is going to be a good fit for you, and if it is, you'll get a 20% discount if you're one of the next 17 people to sign up. Now let's talk about some of these small cap earnings that are coming up, as well as a few larger cap stocks, because we've got some major players reporting earnings this week. Monday before the open, we've got Palantir. Now, Palantir is not yet profitable, and pretty much all companies that are not yet profitable have been absolutely beat up during this bear market. But Palantir has been showing some really good earnings, and I would not be surprised if they beat earnings once again. Now, Monday after the close, we've got Lyft and Activision reporting, as well as Clover and Take-Two Interactive if you're invested in those. Then Tuesday before the open, we've got Workhorse, and then Tuesday after the close is a big one. It's AMC. And let's not forget, we also have Walt Disney, Upstart, Plug, and Lucid. major earnings Tuesday after the close. That is going to be the one to watch. I expect some major market volatility on Wednesday due to the earnings that come out on Tuesday. Now, one thing to keep in mind is that historically, we will get a major rally the day after elections here in the US. And Tuesday is election day. So it's going to be a bit of a toss-up between what all of these major companies report for earnings Tuesday after the close and the fact that historically we get a rally on Wednesday. Very interesting. It'll be very interesting to see what happens here. We'll just have to wait and see. It's going to be volatile, that much I know for sure. And the earnings continue on Wednesday with the Trade Desk and Roblox and Fiverr all reporting earnings Wednesday before the open. And then after the close, we've got Rivian. We've also got Wynn Hotels, Unity, and Beyond Meat. And then before the open, we've got AstraZeneca and big one, NIO. Now, Chinese stocks have been absolutely beat down this year over fears about China stocks getting delisted due to all the political issues that we've had going on. So we'll have to see if NIO's earnings can turn things around. I'll tell you this, so far, the electric car companies in China that have reported, the earnings have not been good. A lot of them have been missing earnings. They're showing declining sales. And this is just due to the massive amount of shutdowns that China has had to go through with all of the COVID lockdowns. Now, Thursday after the close, we got Matterport, and that mostly wraps it up for some of the bigger names reporting earnings this week. So a lot going on this week. I wish you the best of luck trading. If you got a lot out of this video, be a good friend and share this video with your friends and family so that they can get prepared for this week in the market as well. And click that like button and subscribe. And if you want to know more about what's going on in the market and what to expect, go watch my last video that I uploaded here.